Okay, this is a video talking about some personalities in crypto. I'm going to look at 4 people. And I'll talk a little bit about crypto. It's for beginners, people who don't know much about cryptocurrencies like Bitcoin and Ethereum. And I just thought I'd introduce some of the main gurus, because just like with the normal tech world with Apple and Microsoft, which have gurus like Bill Gates and Steve Jobs, etc. Crypto has its own tech gurus, its own personalities who have huge influence on their followers and on how on the message that these crypto projects can pass on to the public as well. So, firstly, why crypto? Why do I think crypto is so important? And that these 4 people that I've put here, Vitalik Buterin, I've got my mouse here, Vitalik Buterin, Charles Hoskinson, Gavin Wood, Anatoly Yakovenko. Why are they so important and significant in the crypto space? And I believe in the future they will have just as much impact as people like Steve Jobs and Bill Gates have in the traditional tech world. And here's the first reason: just the Bitcoin. Bitcoin is the greatest investment of all time. I got this summary from Gemini AI. Based on the available data, Bitcoin has been the greatest asset to invest in over the past 15 years, offering significantly higher returns compared to traditional assets like stocks, real estate, and gold. Here's a comparison of the compound annual growth rates for different asset classes over the last 15 years, based on the search results. And I just ask, which is the best asset class that's delivered the most returns? So Bitcoin has delivered 80 to 103% compared to the S&P 500, and then real estate and gold, high yield bonds, US bonds. So the technology is significant. And Bitcoin is like the first generation. It's a fantastic store of value. It's been called digital gold. And there is a personality behind it, which is Satoshi Nakamoto, although no one really knows who he is. So I haven't really mentioned him in this. Now, so let's continue. The pros and cons, looking not just at Bitcoin, but at all cryptocurrencies. So there are a lot of negatives, and it's probably why a lot of people have steered clear of cryptocurrencies. There's a lot of scams and fraud. There are hacks, which is kind of bad news, just as there are hacks in Web 2 where bad actors steal personal information, and they might steal emails or credit card information. It's even worse with cryptocurrencies because they're stealing monetary value itself. They're stealing funds. Technical difficulty. So for people coming into crypto, that is a big challenge if you're not very technically minded, which I'm not. Maybe I'm a little bit more than the average person, but I cannot code. So it is a difficulty for me. Apart from Bitcoin, when you want to invest in cryptocurrencies, at the moment there's just too much choice. What crypto chains should you invest in? And you have to do a lot of research. And while there can be incredible gains, like you can earn 100 times your original investment, you have to know which one. So you might end up investing in 100 different projects, and one of them has 100 gains. So then you're kind of back at square one. And 99% of crypto projects will fade, most likely. And unless you're very good and very savvy at knowing when to buy and when to sell, you probably won't make money on 99% of these projects. There's a lot of speculation and hype. Not only do you have to do research, you have to sift through a lot of the hype, and it's very easy to be sucked in by the wrong influencer, and it's very difficult to distinguish what is solid, good investment information and what is just hype and getting you all excited for the wrong reasons. That also includes meme coins and gambling. I think it's really put steroids into gambling, the whole crypto scene. And some of these projects have an almost religious following. And that's where I think a lot of people put their common sense out the window. and maybe they invest too much. They get emotionally invested as well, and maybe they can't see clearly to make the right decisions. Now, talking personally, I've fallen for some of these things. I've been into crypto for about 5 years now. I have lost funds both in scams and fraud. So I had a little bit of Bitcoin in Celsius, which was a project back in 2020, offering interest on your Bitcoin deposit, saying that you can lend out your Bitcoin just like lending out in a bank. So I put some funds in that, like a lot of people did, and it turned out to be an unsustainable project, which went to zero. And Mashinsky, the CEO, he's been sent to jail now. I've also lost 1 ETH in another scam during a difficult time when I was over in Japan during the COVID lockdown. I was alone, and I fell for this scam offering, send in 1 ETH, you'll get 2 ETH back kind of thing. So at the time I would have lost maybe $3,000 from that. So it has been tough, but luckily that wasn't my whole funds. I've always diversified, so I've had funds in that I've kept in crypto, and so now I'm back above water, I suppose, because of how well Bitcoin has been doing in the last 3 months. Now the pros, talking about the pros, even despite some of these setbacks, you can still earn money, or you can still get a return on your investment. I haven't really earned money yet. And there are many reasons why people are getting into crypto. And the first one is that the fiat system is failing. As many governments go into debt, they have to print more money to pay off those debts and to keep the governments functioning. And they say that the US dollar is the best dirty shirt in the laundry. So meaning that not only is USD gradually losing value because of inflation, but many other, all other fiat systems really are failing. Some are a lot worse. I guess people in Turkey and Venezuela have experienced terrible inflation. I'm in Australia, and it's not terrible, but it's a bit worse than the USD. So where to put your money? And of course, there's traditional assets, but like I showed you before, Bitcoin has just been the greatest investment asset of all time, and it just seems to be getting stronger. That's also because of network effects. It grows like the internet grows, like things like Facebook have grown, or Google have grown. So yeah, it just seems to be part of the way technology grows when it gets adopted. and it's decentralized. It's a credibly neutral currency. So mainly Bitcoin and Ethereum. There's no government controlling it, and there shouldn't be any big company controlling it, which means that that there's less manipulation. Not that it's perfect. There is still some manipulation, and there is still what they call whales, people who have huge amounts of money in Bitcoin or other cryptocurrencies. And sometimes they do manipulate so they can sell and dump to bring the price down. And then other people will sell thinking there's a big crash. And then they'll buy up again when it's kind of at the bottom. Or they might do the opposite. They might buy up to pump up the price. Other people jump in and start buying, and traders jump in. And then when it reaches a certain level, they dump and they make gains. So that's the advantage of being whales. So that happens in both traditional finance and cryptocurrency. But anyway, it's not controlled by one central bank, or it's not controlled by one big tech company. And it's international capital. So the great thing about Bitcoin and Ethereum and other cryptocurrencies is that it doesn't matter what country you're in, you have access. The traditional investment system, you can get access with some conditions. So I'm in Australia. I have been able to invest in some American companies, but there's a lot more freedom with cryptocurrencies. People around the world in Africa, they can get access to Bitcoin now. People in Turkey, it's a lot easier. And as long as you have a software wallet, you can connect to decentralized finance. You can exchange your fiat money for Bitcoin, and you can save, and that can help you escape inflation. Many people, I think I've heard from countries like Venezuela, have exchanged their fiat currency for a USD stablecoin, just because the USD is a better form of saving money. So it is just providing a lot of utility especially in countries where there is rampant inflation. Now this is important, programmable. Bitcoin was the first generation, and then the second generation is Ethereum, where the programmability allows many things to be done: lending, borrowing, and buying and selling NFTs, or the digital artwork that's linked to NFTs. It's allowed the money of cryptocurrencies to be used in gaming, exchanging game assets. Like in a certain game, you might be able to buy swords or clothes for your avatar. So it's really opened up that. The future adoption, I think cryptocurrencies are just going to only get bigger, just as online banking has gotten bigger, just as Facebook and other social media applications have gotten bigger around the world, as it gives people around the world all these different tools and different ways to make a living. And the network effects, which I've always spoken about. So I think overall the pros do outweigh the cons. You just have to do the right research. You have to be careful on how you invest. You have to diversify. You have to do a lot of research. But I think overall, it's just shown Bitcoin alone is the greatest asset. And some of these other cryptocurrencies will be even greater than Bitcoin. Some of them perhaps are for some returns. But they have a lot higher risk and maybe are not as sustainable. So let's talk about crypto gurus and why they're influential. So they're very good at spreading the message. the thing about crypto is it isn't just the usefulness and the technology involved. There's also a narrative that drives the value of many cryptocurrencies. So these gurus can be very influential in promoting it. There's this term they called maxis, people who have maximum belief in these coins. And it's not just the builders or the tech gurus. There's many fans or people who invest. Michael Saylor is a famous investor of Bitcoin. He's created a company called MicroStrategies around borrowing money, like borrowing USD and buying Bitcoin, and using the increase in value to keep the company going, because as USD goes down, Bitcoin goes up. Elon Musk is another maxi for both Bitcoin and Doge. I think his influence has meant that Doge, which was the original meme coin cryptocurrency, to do very well and to keep on making gains. So let's talk about our first main guru. That's Vitalik Buterin. He's the visionary and co-founder of Ethereum. So Ethereum is the second biggest cryptocurrency after Bitcoin. So first you'll learn about Bitcoin, and second, Ethereum is the most significant cryptocurrency to learn about. It was launched in 2015. It's the first and leading smart contract platform. According to market cap, how much funds are in the system. The ecosystem has lending and many other dApps. dApps are decentralized applications. So these are like financial applications, that financial versions of the banking system, which are providing people around the world access to lending and borrowing, all kinds of services. So Ethereum is the layer one. Now it is expensive for fees, although the fees have come down a lot over the last few years. But on top of the Ethereum layer, there are also many layer twos, which are very cheap and very fast. One of the biggest cryptocurrency exchanges in America is called Coinbase. Coinbase have launched a layer 2, so people don't have to pay the expensive fees on Ethereum. They can go on their base layer and pay very, very cheap fees. So the narrative is very important. Some people have called this the world computer, as it's like a second generation on from Bitcoin. It works like a financial computer around the world. I prefer the term global settlement layer. I believe it has the potential to become the future version of government bonds. Because quite frankly, over the last 50 years, large nation states have seen it useful to invest in American government bonds. Countries like China and Japan especially, and Britain. But I think more and more they're going to look to Bitcoin and Ethereum. Ethereum is also significant because there's a yield. You can earn 2 or 3% interest, which isn't a lot, but the inflation rate of Ethereum is very low. It's about 1% a year, and sometimes it can become deflationary. So let's hear some of these gurus speak. And if you want to know more about Vitalik Buterin, you can also follow his website. The way it works, because Ethereum is decentralized, it's not run by one person. It's not run by a company. It's run by many groups of people all around the world. So it's completely decentralized. There's no one leader. Vitalik is just a spiritual leader, if you will. So he's very influential with his blog, and he talks about a lot of the future plans to scale Ethereum and improve it. Bitcoin is more like digital gold. It doesn't, although there is a lot of upgrades, it doesn't really need to change so much. People just buy and hold. But Ethereum, because it supports these decentralized applications, these dApps, has to continue upgrading so that these dApps can become more useful to people around the world. They want to onboard billions of people. So let's hear him speak about Ethereum.
For the next years and for the next decades, and continue finding new sources of funding so that these things can continue happening, right? Like, I think Ethereum should be an ecosystem where we work on resilient and long-term solutions to make sure that this shared infrastructure is being funded, right? Like, Ethereum, I think, basically since the beginning, it's been an ecosystem where we really care about things like decentralized governance, right? We care about DAOs. We've cared about things like quadratic funding. We've cared about how to govern things like oracles for DeFi protocols. We've built, a lot of people have been enthusiastic about building various forms of digital companies, digital nations. And I think for all of those ideas and that enthusiasm to get somewhere, I think basically we should start with Ethereum itself, right?
Okay, so that's him talking about the vision for Ethereum, talking about digital nations. We do see the power of this technology. It is really going to support whole international economies that are kind of beyond nation states, which is quite an amazing thing to think about. So that's Vitalik Buterin. Let's go on to the next. Let me get to the slideshow. Before I go on, there's some great books to read to help you understand this kind of second generation of cryptocurrencies. These two books, The Kryptonians and The Infinite Machine, talk about how Ethereum was created. It's written by, both books are written by journalists. So it's not really technical. It does explain it for lay people like myself. And it talks about a lot of the key people involved. So next we're going to look at Charles Hoskinson and Gavin Wood. They were both co-founders of Ethereum, but they left Ethereum to start their own cryptocurrencies, which is a bit of a theme because it's software. A lot of the times when a cryptocurrency blockchain is created, a few years later, the founders often want to start a new chain to kind of maybe go in a new direction. So there's always a shiny new thing with crypto. So that is a challenge. And it's always, I find it's been useful just to keep on investing in Bitcoin itself, because that's the one crypto coin that does keep growing. And I have also invested in Ethereum. So Charles Hoskinson, he's a co-founder of Ethereum, as mentioned, but he's the educator and co-founder of the next blockchain called Cardano. Cardano was launched in 2017. It was a bit slow to develop decentralized apps and stablecoins. Stablecoins are basically the crypto version of USD and some other fiat currency like the euro. But USD is the main stablecoin. And they're called stablecoins because they don't fluctuate in value. They just remain linked to the US dollar. And so that's one of the main onboarders of people into crypto. The great thing about Cardano is there's a lot of academic interest from universities and research institutes. And recently, they've achieved a Bitcoin integration because they both use similar technology of UTXO. UTXO is, well, to explain it, it's a transaction data model, which, what does that mean? There are two main transaction data models. It's basically the way that transactions are recorded, I guess, and settled. It's a bit technical, so it's a bit beyond me. But the main takeaway is that UTXO, or unspent transaction output, is used by Bitcoin and by Cardano. So that means Cardano has a bit of an advantage with Bitcoin. Whereas Ethereum and other chains are called account-based. So a slightly different transaction data model. So let's listen to a bit of Charles Hoskinson. He has his own YouTube channel. So he does a lot of education. If you look back at his past videos, if you go to the oldest, there are some good introductions. This is where I learned a bit about cryptocurrencies and blockchain. So let's listen to, where is his speech here?
In fact, in the 1930s, we witnessed the global depression caused by tariffs and over rampant speculation of the 1920s. And it took more than a decade and a world war to kind of get us out of that. And we said, you know what we're going to do is we're going to create a rules-based international order on the back end of this to allow the world to come together in a different way. And unfortunately, as much as we wanted to do that, we still were under what's known as a great powers conflict. No matter what the treaty said, no matter what the law said, the Soviet Union and the United States were basically in charge of the world. And so if the Soviets said something, or the US said something, it would go against what the treaty was. Well, after the collapse of the Soviet Union, we actually tried for the first time ever a true rules-based international order. We had the World Trade Organization, the IMF, all these other organizations in the 90s, 2000s. And it kind of sort of worked until it didn't. And then we saw the 2008 banking crisis. And that crisis created so much frustration because they said, you know what we're going to do is we're going to solve the too big to fail. And we're going to regulate the global markets differently by making banks bigger and more centralized. And, and the cryptocurrency space started that moment in 2008. It came from a lot of ideas in the cypherpunk movement. And there's actually a lot of pioneers still around, like David Chom and others, who basically came up with some ideas of how to create a decentralized ledger. But it took about 30 years of proto-crypto stuff. In fact, at this conference, Adam Back is here. He was part of that movement, amongst others. And Bitcoin was really the first generation. And the problem they were trying to solve is something very simple, deceptively simple, but it was so hard it took 30 years to resolve, which was this idea of decentralized value transfer, a decentralized ledger, email for money. You just push a button, send it to anybody you want, you push value to them, and there's no middleman that can stop you or has to regulate that. Seems pretty simple, super hard to do. And nobody believed it actually worked for about 4 years. And around 2013, people started acknowledging, hey, this Bitcoin thing, it's here to stay. We like it. But the thing about finance is never happy. The minute you actually do something, they're like, what else you got? So we needed programmability. And that's really the second generation. Kind of like when JavaScript came to the web browser. We went from these static, beautiful websites with little GIF flames, cool pictures and things like that, travel blogs, to Amazon and Facebook and all these amazing experiences. Now, you couldn't predict ahead of time what these experiences were going to look like and how they would taste, touch, and feel. The creators of JavaScript could possibly imagine all the magical things that they created with it, but that was the point of giving a programming language to people. Programming language meant that the web was your dream. So the analogy in the cryptocurrency space is we couldn't predict the types of transactions, the applications, the financial relationships, the contracts between you. But we gave you a smart contract language, and then suddenly you're able to do all these magical, amazing things. And just like when the iPhone came out or any of these other things came out, everybody's extremely excited. They go, wow, yay. And then a year later, they're like, what do you got? What else you got? Same for ChatGPT, same for Skype. It's the same for all these things. It's just the nature of technology. You have this extraordinary hedonic amnesia that kind of works its way through. Okay, great. So then the third generation started percolating up around 2015. And that generation was saying, we like the smart contracts, we like the decentralization, we like the idea of email for money, but it needs to be better, faster, cheaper, so scalable. It needs to talk to everything because we have TradFi and Web3 and 400 million other things. And the other problem is there's a lot of complexity here. So when we want to upgrade or change the product, it's not intrinsically clear how we do that. See, when you have a phone has a manufacturer. The operating system has an author. There is a governance process behind how that evolves and changes. So the new iPhone, you look to Apple and you say, Apple, what's the new feature set going to be? When you look to Microsoft for Windows, you say, what's the next version of Windows going to have? You look to the open source group behind Android, mostly Google and Samsung, you say, what's the new Android going to have? And they can tell you, and they can make that decision. You take it as a consumer. But in a decentralized protocol, how exactly do you decide what features are priorities and who gets to decide that? And how do you upgrade that? Well, governance.
Okay, so yeah, he's talking about decentralized governments there. And that's the other revolutionary thing about cryptocurrencies is that decisions can be made through a consensus of voting on chain using the cryptocurrency. So it's a new way of organizing capital, I suppose, and a new way of doing business. So yeah, Charles Hoskinson is great at explaining those kind of things. Let's continue to the next guru. Gavin Wood. So Gavin Wood was also a co-founder of Ethereum, and he is the educator and co-founder of Polkadot. He's more technical. He likes to educate the developers and the coders, so he's a bit harder to understand. He launched Polkadot in 2020. It's called a layer 0, not exactly a layer 1. So Cardano and Ethereum are layer 1 blockchains with the decentralized apps on top. They can also be called smart contracts. But Polkadot is a layer 0, which is a base layer for whole blockchains. So for example, there's a Mythical Games chain with FIFA rivals. So the software company Mythical Games has established its own actual blockchain on top of Polkadot. And I think there's about 70 blockchains on top of Polkadot. And there's a new upgrade called Jam coming, which they aim to be the decentralized cloud like AWS. So what is AWS quickly? AWS, or Amazon Web Services, is a comprehensive cloud computing platform. It's like an arm of Amazon. It provides a wide range of services, including compute, storage, databases, analytics, etc. It's accessible via the internet, it's global, it's scalable. And so Polkadot wants to set up a decentralized version of that, where there's not just one big multinational company like Amazon benefiting, but rather it's a blockchain where all the token holders in Polkadot become the beneficiaries of providing this huge web service. So they have, Gavin Wood has big plans to make it very scalable, very cheap, very fast transactions, up to millions of transactions per second. And let's listen to Gavin Wood. If I can find him, here he is. Okay.
Actions. Privacy. being a notable one, but all the rest of it as well. And there are times when these come into conflict. Now, I think Polkadot could do a much better job at communicating this. Don't get me wrong. And this is something that we are heavily focused on at the moment, like coming up with ways of presenting this and phrasing this and helping people understand the difference of Polkadot from other approaches. I think, honestly, Ethereum is one of the very few other projects that cares about doing things sort of the right way, doing things in line with the Web3 principles. Most projects are focused much more, I would say, on delivering kind of short-term factors. With Polkadot, it's really, we're building for the long run. And when you focus on the long term and you focus your resources on the long term, inevitably those short-term factors can be shortchanged.
What does success look like for Polkadot for you? What's the day you can say, Polkadot achieved exactly what I wanted?
Being useful, being the platform that provides Web3 to the world. Now, this is a bit of this implies that the world wants Web3, right?
Interesting.
And that is not necessarily the case. That is yet to be shown. I mean, people did move to HTTPS after the Snowden leaks, implying to me that there is some desire to have these guarantees, strong guarantees, technology-based guarantees, not social or legal-based guarantees. But, it's not clear to me that this is an immediate pressing need that people feel. I feel it. And I think with the disruption that's happening internationally in the 10 years since I started all this journey, the world is moving in a direction that where people increasingly will recognize the need for this. But is it widely felt at the moment? I don't know. Maybe not. Okay,
sorry, my computer's losing power there. All right, so back to what we're doing here. So that was Gavin Wood. So these gurus have big dreams, big visions to really change the world with their technology. Okay, and finally the last one is Anatoly Yakovenko. He's the visionary and co-founder of Solana. That's a more recent project. It's the biggest competitor to Ethereum now. Over the last couple of years, it really jumped ahead, and it's faster and cheaper generally. And their aim is to be the decentralized NASDAQ. So they're a bit more focused rather than Ethereum, Cardano, Polkadot. It's kind of, we want to change the world. We want to set up these decentralized systems that benefit millions. But Solana has just been more focused. We want to be really fast, really cheap, and have the NASDAQ run on our chain. They also are quite entrepreneurial. They've got a Solana phone. I think the first one is called Saga, and then the latest one is called Seeker. And so when people buy this phone, it has a lot of crypto apps and that are aligned with the Solana ecosystem. It provides free tokens. They call them airdrops. So free tokens when you get this phone. A lot of the projects may not do well in the future, but it gives you an opportunity to get in early. Solana is also known for meme coins, and there's a big platform called Pump.fun or Pumped Fun. And we'll just quickly look at Anatoly and look at these platforms. So that's the Solana phone. And it's quite popular. The first Solana phones that came out, the legend has it that people got their money back and then some with all the free tokens that were on the phone. This is Pump.fun, which allows anyone really to launch their own meme coin. And of course, I think it just really is a lot of gambling. I don't see any of these coins, these meme coins, actually having any future promise. It's like I've heard there's been like 4 million coins started. So obviously there's a very, very small chance that the coin you choose on this platform is going to get anywhere. But Solana isn't just meme coins. There are a lot of other projects on Solana. There's what they've called projects that have more use in the real world, such as providing decentralized Wi-Fi. But anyway, let's listen to Anatoly.
Well, I think I can answer the latter question a lot easier. I think the best place to issue them is going to be the cheapest, fastest blockchain that's globally distributed, because you're reducing costs for the issuer and for everyone that owns those assets and trades them and moves them around. And ultimately, I think the purpose of all these systems like software eating finance is to reduce costs for the users. And I think the reason to do that is eventually because that's just so obvious. Like, I don't know if we're there yet because of there's still a lot of challenges around cost and congestion and a whole bunch of other stuff with MEV. But the technology has proven itself to be, I think, probably better than 95 or 99% of centralized exchanges out there outside of like the major ones in the US.
Better in what way?
In terms of efficiency and pricing for users and cost and speed. Because I think ultimately time is money, right, in finance.
Okay, so yeah, that's Anatoly, and he's got a very practical mindset. He really knows how to onboard for billions of people and billions of consumers. So he's taken a slightly different approach, which has been very, very successful. I'll just go back to here. There are some criticism from the other projects that the Solana blockchain isn't quite as decentralized. With Ethereum, for example, anyone can contribute to the staking and consensus of the blockchain and earn rewards. So Ethereum allows millions of average people to support Ethereum and gain rewards from that. Whereas with Solana, to become, it's called a validator, to validate the blockchain, to provide consensus and support the blockchain, you have to run a data center, which is beyond most average household computer users. So there is a bit of criticism where Solana isn't quite as decentralized, but it's faster, it's cheaper, it's getting into millions and millions of people. Okay, finally, I thought I should mention there are also crypto villains. I'll just talk about these. I won't go into the websites, but you can look them up. And these are the bad personalities that have got even more media coverage in the mainstream media rather than the gurus I've been talking about. So I think a lot of people have heard about Sam Bankman-Fried, who started SBF. SBF made a lot of big splashes in America back in 2020 with a lot of their advertising, FTX advertising, using some celebrities. So when FTX collapsed A lot of people lost their money. And I think everybody saw in the news how he went to jail. Another villain is Alexander Mashinsky, who I spoke about before. He ran Celsius, and a lot of people lost money in Celsius, like me. Mind you, I did get back about 3/4 of the funds because of the American legal system. So Celsius went into bankruptcy and there were legal proceedings, and a lot of the average investors who used the platform did get their money back. I got my money back via Coinbase. I got it, so I had invested mainly Bitcoin, but when I received funds back, I got a little bit of Bitcoin back and I got some Ethereum back. And it came to about 3/4 of the value. So I didn't completely lose out there. Another crypto project that collapsed was Terra USD and Luna. And the villain there was Do Kwon. I think he was just very bold in setting up this new blockchain that could use programmability and mathematics to generate USD, a stablecoin version of USD with their blockchain called Luna. Unfortunately, it didn't work. I think when there's a crash in crypto, a lot of people pull out their money, and I think the Luna blockchain couldn't handle it. And so the Terra USD lost its peg, and people realized that this stablecoin that they invested in the value of USD was losing value, and they had to pull out quickly. And so the whole thing just collapsed. Finally, a different kind of villain is Gary Gensler, head of the SEC, which is a regulation body in America that regulates securities and companies going public with the shareholders. So the SEC was very critical of blockchain projects and made it very difficult for them legally. I guess from Gary's point of view, he was trying to protect consumers and investors, and he maybe was involved in preventing people losing money with these other bad projects like FTX and Celsius. But the criticisms from the general blockchain community was that Gary and the SEC didn't provide clear guidelines on how blockchains could operate legally. So it's very difficult for them to set up in America. So he's been removed since the Trump administration. So some people feel happy that he's gone, and the SEC is now more pro-crypto. Of course, there still needs to be regulations because, even with Trump, with his Trump meme coin, there's kind of a lot of conflicts of interest and corruption there. So it's an ongoing issue. Okay, that is the end of my video. I hope some people have found it useful. If you have, please like and subscribe. Of course, this is not investment advice by any means, but thank you for watching.